Oil prices, meantime, came under pressure today after President Trump said he told OPEC members to lower prices. Domestic crude settled down about 3%, and that snapped the commodity's longest weekly win streak since the first half of 2015. Despite today's decline, oil is still having a big run-up this year. It's still gained more than 35%. Given that, you might assume that the country's two largest oil producers would be doing well. But that wasn't the case when ExxonMobil and Chevron reported earnings. Both saw profits fall in the most recent quarter, and that sent their shares lower during today's trading session. Dominic Chu takes a closer look.
One of the biggest drags on the Dow today is ExxonMobil, after the integrated oil and gas giant, America's most valuable energy company, posted profits and sales that both fell below average analyst estimates. Now, a big part of the story at ExxonMobil focused on the downstream or refining and chemical operations. It said profit margins were also weaker due to, among other things, higher refinery maintenance costs. Now, a bright spot for ExxonMobil remains on the production side. Overall production of oil and gas rose by 2% over the same time last year, meaning it now pumps out 4 million barrels per day. And when it comes to U.S. shale production at the all-important Permian Basin, that's 140% higher than it was last year. A similar story with fellow energy company Chevron. The fellow Dow component was also a drag on the overall index after it beat analyst profit estimates but fell shy on revenues. It, too, grappled with falling profits at downstream businesses like refining and chemicals. But it also saw overall production rise, like ExxonMobil, helped along by U.S. shale oil and gas production. For Chevron, though, investors are perhaps more focused on its pending bid for smaller competitor Anadarko Petroleum. That deal was upset after Occidental Petroleum came in with its own bid for Anadarko that trumped Chevron's. A key story for oil and gas in the coming months will be the trend of oil prices, as well as the possible merger activity as bigger players look for more U.S. acreage in shale assets. For Nightly Business Report, I'm Dominic Chu.